So yeah, we'll jump straight into the questions. I won't mention the names, obviously, who asked them. I'll just keep them anonymous. The first one is, how does NFP work? Now, I'm not too sure. I wasn't too sure actually how to answer this question in the first place. NFP is obviously a figure of the payrolls of people that are not, so not including the farming industry in the US. So it's sort of an overall perspective of uh, employment to a sense, excluding obviously the farm, the agricultural side of the economy, which is obviously huge, as you can imagine. You know, if you look at Texas and places like that with huge sort of land space, there's a lot of farming and as well as other states, but there's just a lot of farming and things like that. If you go over to Kansas as well, you've got the wheat. There's huge revenue for certain states. And the way it works is it's simply just a monthly figure that's calculated, and is just released on, you know, various news feeds at 1:30 p.m. GMT on the first Friday of every month, unless that particular Friday is the first of the month, in which case it will then roll into the 8th um, of the month, sort of the 8th of the calendar month. I hope that answers the question. If that doesn't clear that up, sorry. Does fundamental analysis affect the market? Fundamental, it depends how deep we want to go with the fundamental side of things. There are, you know, we can have a quick look. If we just have a look on the economic calendar, you know, this does a great job for us of arranging the sort of effect, if you like, of the fundamental news. It's under the on FX Street. It's under the impact heading, so it will give us an impact from sort of yellow, amber, all the way to red. And obviously, the red is, you know, really it's going to impact the market. It's not so much that it's going to impact the market, um, but it is that it's going to. There's more eyes on that particular figure. So the ones that we like to look out for. And it's just, you know, we don't need to look at it for a perspective on the market on that particular day, but it can lead towards, fundamentally, the interest rate is the, you know, the driver of an economy, but the interest rate is sort of priced, if you like, based on various economic factors. So the employment, the inflation, consumer spending, consumer confidence, um, GDP as well as another one. So it's all these things that sort of, you know, add up to make one larger piece of fundamental analysis. So yeah, it is. You know, I like to keep on track, on top of what the markets are going to be pricing in and what the interest rates will be doing. So I do look for the major news related topics, and I don't look at every single um, piece of information. For example, here we've got the EUR, which, funny enough, has got the German flag. So when I'm looking for European data, it will largely just be that the German figures that will be monitored, because they are sort of the backbone of the EU. So it will be, you know, the German employment, the German GDP, as you can see, that the consumer prices, which is another big one. You do also get the month on month and the year on years. So again, the year on year will be far more important than month on month, because month on month figure is, it's a very short term analysis. The year on year is more of the long term, which is how the interest rates are going to be uh, factored, because of the longer term effect. If a non farm payroll figure is bad, the US aren't going to then suddenly cut rates to try and stimulate business and spending and things like that. You know, it may just be an anomaly. If they're continually bad over a period of maybe 5 months or 6 months, however long, we may see a slight impact towards the FOMC statement towards interest rates. What is the objective of the big boys? Why do they risk money? Simply, the objective of the big boys is to make money. It's as simple as that. Why do they risk money? Because you can't make more money in the markets without risking money in the first place. Um, it's nice, easy one that. This one recently just came in actually. How can someone join a trading floor? This is a great question because it's on topic with what the group was actually talking about. Um, Unfortunately, nowadays, the firm trading floor or prop firm is been clouded massively within the past 5 to 6 years. So, um, when I joined Marex, when I first sort of stepped into a trading floor, it was completely different to what you guys are now faced with today in 2020. Um, Meaning, there are far more con artists, there are a lot more scammers around. It seems that the scammers make more money than the trading industry, um, for a starter. There is also sort of a deluded uh, message that's sent out as to what a trading floor actually is. You know, um, there's a lot of these companies like the FTMO guys that you all speak about. Although they're a prop firm, they're not what I would relate to as a prop firm. To me, a proprietary trading firm is somewhere that is not necessarily based in London, but typically based in London. They have 20, 30 desks, all with individual traders that come and rent the desk and also then pay a profit split with their own money and their own profits um, towards the company, and that's obviously how the prop firm will then make its money, aside from the fees. It's very, very difficult now to join a proper trading firm because they're not really, they're very sort of rare to find. When I first joined the industry, there was, less than there was 5 years prior to that, trading firms around. Now there's even less. Some of the big names that sort of I grew up with in the industry have closed or gone bust or whatever it may be. They're closing. Um, Purely because it's so difficult for the traders to make money. If the traders aren't making money, then the prop firm won't, in theory, make money. The prop firm will make money from desk fees, but if there aren't any traders to pay the desk fees, then the prop firm won't make any money. Um, it is extremely hard to trade for a London desk, if you like. It is extremely difficult to do because you can't have this small £1,000 deposit with a steady 2% growth every month because £1,000 won't even pay for half of your month's desk fees. So you do need a large amount of money to begin trading at a London prop firm. And when I say a London prop firm, I mean a proper trading firm. We execute on the futures or the cash markets, or we trade options. We're not looking at the guys that like the FGMOs and the sort of I don't want to say it in a derogatory term, but the almost rookie or entry level prop firms where we trade CFDs on demo accounts and we have to prove ourselves and whatnot. But for example, a London trading floor will have when I first joined, it was £10,000. So we needed to have a £10,000 deposit to open an account. Now the majority of trading floors that are around, and this actually changed when I was still at the in London, most prop firms require at least 25k just for your account because you have larger margins to pay, you have large drawdowns and large sort of swings in the P&L because of the markets that you're trading, the futures markets. You're looking at sort of $10 a tick for trading oil, whereas you can really reduce that to almost nothing on the CFD. You can't. The smallest lot size you can trade is one, and then therefore the smallest price increment you can have, or the P&L increment, is $10 on the oil contracts. Um, the other thing you need to have an upfront. Majority of trading floors require a 3 month upfront payment for the desk. So that means you have to rent, like you would when you rent a house or rent a flat, whatever. you will need to pay for 3 months worth of desk fees in order to be there. And then after that, it will be like a rolling, unless you sign a contract to say otherwise, it will just be on a month by month basis. London prop firms, they do vary in terms of how much they charge. But one of the cheapest that I found that when I first started that closed within 6 months was charging £1,600 a month. Um, that's not including VAT or system costs. That was all down to the trader to source out. Most floors will have deals with front end system providers, so they will include that in their price, which is where we start at sort of 2,200 plus. Um, I think it was at Marrick's, and again, like with any brand, you pay for the name. So Marrick's, RJO, Kite, um, EDNF Man, all the big clearing houses with trading floors will charge a premium. And Marrick's were charging me close to 5k a month for my desk. So it's huge. You need to be able to make money off the bat, and you need to be able to make big money off the bat, because if you don't, you won't last a week. You know. Um, Sorry, that was quite a long drawn out question, but I hope that's cleared a few things up. How do I determine a daily bias? Is it technical analysis, or is it a fundamentally derived price? Um, Really, for the direction of a day or a week or a month, usually I will base that on technical analysis, unless there's an obvious reason for the fundamental reasons to change. Um, Remember that the technical analysis on a chart on a larger time frame or a larger scale is simply just reflecting the overall view of the fundamental analysis um, for for that particular day or week or month, whatever time frame we're on. Um, Now, obviously, with the fundamental stuff, a lot of that is manipulated on the day. So when I say manipulated, I mean we have large moves in what you'd expect to be one direction occurring in the other direction on an interest rate decision or an NFP figure or some major figure like that. But a lot of the daily bias for price action is determined for me on a chart, and I look at the previous day's price action as to what we had. And you can see that if we're approaching price levels on to the upside, we may see sort of a spike higher into that particular price, followed by a sell off to the downside. But I do couple that with an overall view of, is the dollar, for example, looking strong, or is the dollar looking weak? Is the oil sort of production looking to be increased? Is it looking to be decreased? And so on and so forward. Um, what is your biggest win? So my biggest win on my own personal account was on oil, WTI, and it was around about $49,900. Um, that was just trade. That was a 40 lot actually. So it was quite a big trade, but it wasn't huge in the sense that it was just under $1, 100 ticks. It was just because of the trading size I was using. So obviously 40 lots, 40 contracts. It's around about $400 per cent of price movement. Um, Funny question from the same person, I presume. What is your biggest loss? My biggest loss as well, conveniently, was also 49,000. That was on oil as well, and that was on a deck spread, I believe. Um, this was, to me, this was huge because aside from the market making that I was doing, I still had my own trading account that I was trying to profit from as well for 100% gain, rather than obviously costs and things for the exchange and for the company. But yeah, the biggest win and biggest loss are pretty zero sum game there. That's perhaps trying to tell me something. What markets do you trade? Um, at the moment, it's pretty much anything that's looking good or looks good to me. I look at quite a large array of different markets, bonds, commodities. I've never traded stocks ever, but I am looking at stocks um, at the moment, and I have been looking at stocks the past 2 months or three, 2 or 3 months. What's the strangest market you've traded? I hear you talk about strange markets a lot in the group chat. Yeah, so strange markets, I do always say that I've traded some really peculiar markets. Not when I've never actually traded a peculiar market for my own account. I've always made markets on peculiar markets. So I have traded them, but not um, sort of not for P&L as such as as we all like to trade now. This was for a market making um, basis. But I have traded the weirdest market I've traded was probably wind futures on the exchange EEX, I think it was. Um, and that is, yeah, wind futures. Need I say more? How long have you been trading? So I've been trading for 8, 9 years, 9 and a bit years. Um, so sort of near enough 10 years actually, going on 10 years. Um, yeah, simple as that. First market you traded. So I remember it well. It was the German 5-year bonds, the bubble. Um, and I trade. It was a fairly slow moving market. So when you're trading the bond markets, the longer term the bond, the more volatile um, the contract is. So with the German bonds, you've got the Schatz, which is the 2-year, the Bobble, which is the 5-year, the Bund, which is the 10-year, and then the Buxel, which is not really traded that much, but it's the 30-year bond. Um, the Schatz would only really trade sort of 5 to 7 ticks a day. The Bobble maybe 10 to 15. So I thought it was a fairly good market for me to trade for my first ever time. And I sat with a two lot on the bid all day, and I didn't get filled, and I was sweating the whole day. Most memorable trading day. Um, my answer has actually changed. I've got two memorable trading days now. The first one being when oil traded negative, so fairly recently, and I'm sure we all could say that was a fairly memorable trading day. And the second one, and I think this will haunt me forever, was when I think we called it Cyber Monday in the end. Um, it was 2015. It was Monday. Was it Monday? Yeah, it must have been a Monday. Um, it was. I think it was around about 2015, 2016, something like that. Um, and there were some really bad employment figures out in China. Their stocks overnight were down sort of like 10% on the day. Um, and obviously because of that, then the DAX, the European stocks, which at the time I was trading the indices, so the Euro Stocks 50, um, that had a huge sort of rippling effect on European indices. Um, was I short? No. The sad thing was I was actually long, and that was because the Friday before I was short, and I had a really, really great day that day. I can't remember exactly how much. I just remember it was a really, really great day at the time. So it was probably around about, I think I made about 1,100 to 1,200 quid on that day on a two lot. So quite a significant amount actually, and obviously the market moved a lot as well. Um, and I sat there on the Friday, and I had my bids in to obviously take the profit for my short to cover my short position. Um, what I didn't do was I didn't wait for my bid to be filled. I just closed manually in the market, so I just hit buy, to buy back my shorts manually. Logged everything off, closed everything, and went home. What I didn't do was pull my bids from the market. And then I woke up Monday. My alarm used to go off at 4:30 every morning. Um, and I thought, you know what? I'm going to have a lay-in. I'm not going to get to the office until late because, sod it, I don't need to. I've made good money on Friday. I deserve a rest. I went back to sleep. I didn't look at the news. I didn't look at the market. I didn't look at anything. I just turned my alarm off, went back to sleep. 9:30, I've got a phone call from my risk manager at the time, asking why I was long two lots in a market that's down 6%. And I paid the top, all because I didn't pull my bid. And in the futures markets, well, you know, I'll probably speak more about this in the chats and whatnot. The orders are hard orders. They won't get pulled because it's your responsibility to pull that order. Um, so yeah, I end up losing more than I made on the Friday. Um, and yeah, I'm pretty sure that will haunt me forever. Biggest FX scammer I know. It's a good question. There are plenty of scammers, whether it be that they're selling algos for you to buy, or selling a desk, or selling a course, or selling something, a lifestyle normally. Um, I don't. I try to avoid social media. I've only since starting the group and sort of engaging with you guys. I've been off social media since I can remember, since at least 2012. But now, now that I'm back on social media, it is more apparent, and I can see a lot more of it. Um, the biggest scam that I'm going to say, and I don't want people to hate me if you're friends with the guys, or if you like the guys, or if you've worked with the company, and it's only because they tried to scam me back when I first started. It's Samuel and Co Trading. They are by far the biggest scammers. They're just not. Don't get me wrong. The guy has done very, very, very well for himself. He's fantastic at marketing and fantastic at selling himself. He's really, really good at that. And he obviously does make a lot of money from it all, but it's not from what he says that he does, and that's what frustrates me. Um, so yeah, because of that, and the company tried scamming me when I first started, from when I was first looking to get into trading. Um, they tried to scam me. The best trader that I know, me. No, I'm joking. I'm merely just a foot soldier. The best trader that I know is a friend of mine called Dan. He's been trading far longer than I have. He's been trading since the 80s, um, really. Um, he's knowledgeable in the fundamentals. He knows the technicals. He's not afraid to put a trade on. He's knows everything. He knows way more than me about the markets. Any sort of fundamental information that I relay, um, yeah, I know 50% of it, but then the other 50% comes from him. And when it's due, and when I can, I will always credit him to say that that's come from him. Um, I haven't mentioned my mentor as my best trader, because yeah, although he's a great trader, he doesn't actually trade anymore. He's retired. I think he doesn't live too far from me. He lives over in Brentwood, which is only about 30 minutes away from where I live. Um, but yeah, he's long retired. But he comes in a very, 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 very close second. Um, I think the only reason I didn't put him first is because he was really just a really, really, really great oil trader, and an interest rate trader as well. Um, and that was all he really traded. But he'd been trading since before that, the 60s, um, a very, very, very long time. Whereas Dan, my friend Dan, he can trade. If you put him in front of the screen, and it's wind futures, he will sit and trade that, and he will research everything there is to research about it. And then the next day he'll be in making a load of money and telling me how to do it, basically. And yeah, that's all the questions. So a lot of them were duplicates, or irrelevant from trolls. I've tried to answer the ones that were coming up more frequently. So I hope that's answered a lot of your questions. Um, if it has opened up doorways to more questions, then feel free to message me them, and perhaps if this is of use or of interest, I will be able to do another Q&A.